philosophy that I founded the company on with my two other partners was more being value-oriented, looking for assets that are undervalued, and then staying the course. We are not short-term traders, we're really more longer-term holders of our assets. And as the chairman of the Investment Policy Committee, one of the things that we do at every quarterly meeting is we start off by looking at a 5-factor valuation model that we have put together over the years as a starting point for further discussions about where we want to be in the stock market versus the bond market. Diversification is very important to us, as we don't know what the future is going to hold. Because we're dealing with irreplaceable assets and retirement money, we have to have both stocks and bonds. Within the stock universe, we want to diversify both domestically and globally, so we have international exposure. Within the domestic equity markets, we're really more large cap oriented because we feel that the larger companies with their international exposure and their global reach have an opportunity to give us better returns over a long period of time.
Prior to managing assets at Retirement Advisors of America, I also managed pension assets out at American Airlines. Our Investment Policy Committee uses a very similar approach to what we did out at American. We look at where we are in the economic cycle and we blend that with valuations. After we have defined valuations and where we are in the economic cycle, we then set positions at the asset allocation level. The investment department in our operations area is responsible for implementing the asset allocation that's defined by the Investment Policy Committee. We do that by selecting the positions and also by making sure that the variances as activity happens in the account is very much aligned with what the asset allocation is as defined by the committee.
I've been running the American Airlines pension funds for the last 37 years, and those funds have been ranked in the top decile for all periods of time, going 3, 5, 10, 15, 20 years. I've been involved with about 5 different nonprofits, helping them and advising them on their endowment funds, including SMU here in Dallas, which is a $1 billion pension fund. And since I've recently semi-retired from American Beacon, I've been selected to be the independent trustee on the National Railroad Investment Trust Pension Fund, which is a $25 billion fund. The reasons each of these have been very successful is each of these organizations customize their investment performance with a long-term view, not a short-term view, and focus on diversifying their portfolios over many asset classes, since they're going to be ups and downs in the markets over periods of time. And importantly so, and especially for retirees, is looking at liquidity of their assets, making sure they're available to meet the cash needs of their clients over time. This has become increasingly important, and that's what the IPC does here at RAA in making their investment decisions.